So welcome along. We've received an email from one of our international members and he is studying accounting in a second language. He's asked the following question. How does the choice of a perpetual inventory system impact the chart of accounts? So let's have a look at that. So in our picture in the top right hand corner, we have our warehouse. Now this may be the warehouse of a wholesaler and they keep track of inventory using an inventory system, so they can determine how much is available for sale and how much is being sold. Now there's two generally accepted inventory systems. There's two of them, and the one we're going to discuss today is the perpetual system. Now under the perpetual system, a continuous record of inventory is maintained. At any point in time, the owner of the business, or the warehouse in this case, can ascertain how much inventory is on hand. Detailed records of inventory movements are recorded by the entity through the inventory account. So that's one of the accounts in our chart of accounts. In other words, every time an item of inventory is purchased by the entity, the inventory account will go up. If the inventory is sold by the entity, the inventory account will decrease. So therefore, under the perpetual inventory system, the bookkeeper should set up two accounts in the chart of accounts. One account is called the cost of goods sold, and that's in the profit and loss statement. And the inventory account is the second account, and that will be in the balance sheet as a current asset. So once again, with the perpetual system, we are continuously updating the inventory account each time we buy or we sell inventory. Let's have a look at this example. Let's say we have our warehouse in the picture above, and then they have opening inventory or inventory on hand of 100 units at $6 each. So in other words, we have $600 worth of inventory. So let's buy another 50 units of inventory at $6 each. So remember, we are constantly updating the inventory amount in the inventory account. So therefore the journal entry, well, 50 multiplied by 6, that's $300. So our inventory will increase, therefore inventory debit $300. And if we pay cash, it will be cash credit $300, which means the cash is going out of our bank account. So let's move forward, and we will now sell 20 units at $12 a unit. So 20 by 12, that's $240 for the total sale. Our journal entry, cash debit for the $240, that's been received. And we have sales credit showing the revenue of $240. So remember, we have sold 20 units. We need to update our inventory account constantly. What's the journal entry? Well, the units, or the cost per unit, is $6, and we've sold 20 of them. So we're going to debit our cost of goods sold for $120, and we will credit the inventory account for $120, which means 20 units at $6 a unit has now left the inventory account. So the question remains, how much inventory do we have on hand? And there's good news. In our very simple example here, we do not need to perform another journal entry. Under the perpetual inventory system, we do not need to perform another journal entry. We have our value of the inventory in our inventory balance as we move along. So we have already adjusted our inventory balance as we have bought and sold our inventory. So we will be careful though, and maybe at the end of each month in our warehouse, we will check our records and make sure that the inventory in the warehouse matches the inventory balance in our accounts. So what do we have left? Well, we had our opening balance of 100 items of inventory. We purchased 50 and we have sold 20. So in other words, if we do a stock take in the warehouse, we should have 130 items on the warehouse shelf. So that's it for our video today on the Perpetual inventory system. Don't forget, coming up, we have our business services virtual internship. If you're interested in that, please reach out to us on our website and on Facebook. Our links are here and they're also in the description below, and you'll be able to join us for another session. Once again, if you have any topics that you would like to see us cover in the Australian Master Bookkeepers Guide, please reach out to us and let us know.